You've worked hard to own your home, but do you know how your home can work hard for you? Imagine a scenario where your home isn't just a place to live, but a powerful financial tool at your disposal. That's right. If you're a homeowner, you have an asset that can empower you to meet various financial needs. You might be wondering how. Well, it's through something called a home equity line of credit. This is a unique financial product that allows you to leverage the value of your home. Whether you're looking to finance a major renovation, consolidate debt, or even fund an investment, a home equity line of credit could be a valuable resource to consider. It's like having a financial Swiss Army knife right under your roof. Intriguing, isn't it? Stay tuned as we delve into the world of home equity lines of credit. Ever heard of a HELOC? No, it's not a new kind of clock. It's actually a handy financial tool. Let's break it down. A home equity line of credit, or HELOC, is a type of loan that lets you borrow against the value of your home. But how does it work? Well, imagine you're a homeowner. You've been making mortgage payments for a few years, and with each payment, you've been building equity in your home. Equity is the portion of your property that you truly own. It's the difference between your home's current market value and the balance of your mortgage. Now let's say your home is worth $200,000, and you've paid off $50,000 of your mortgage. That $50,000 is your equity. A HELOC lets you tap into this equity. But how is a HELOC different from a standard loan, you ask? Good question. A standard loan gives you a lump sum of money up front, which you then pay back over a set period of time. A HELOC, on the other hand, works more like a credit card. You have a line of credit you can draw from as needed, up to a limit set by your lender, based on the amount of equity in your home. You only pay interest on the amount you borrow. And just like a credit card, once you repay what you've borrowed, you can borrow that money again. This revolving credit makes a HELOC a flexible option for ongoing expenses like home renovations, education costs, or even to consolidate higher interest debts. But remember, with a HELOC, your home is used as collateral. This means if you fail to repay the loan, the lender may be able to take your home. So it's important to borrow wisely and ensure you have a plan for repayment. So, in essence, a HELOC is like a credit card, but with your house as collateral. Now that we know what a HELOC is, let's dissect its features. A home equity line of credit, or HELOC, is like a credit card. It's a revolving line of credit. This means you can borrow up to a pre-approved limit, repay what you've borrowed, and then borrow again. You're not taking a lump sum up front, but instead have the flexibility to use the funds as and when you need them. One of the key features of a HELOC is its interest rates. Typically, these are variable rates, meaning they can fluctuate over time. These rates are usually based on an index, like the prime rate, plus a margin determined by the lender. While this can result in lower interest rates compared to other forms of credit, it also means your payments can increase if rates rise. Now let's talk about repayment. With a HELOC, you'll typically have a draw period, usually 5 to 10 years, during which you can borrow against your credit line. After the draw period ends, you'll enter the repayment phase, which can last up to 20 years. During this time, you'll need to repay both the principal and interest. Some lenders may ask for a balloon payment at the end, where you'll need to pay off the remaining balance in one go. Finally, let's discuss potential uses. A HELOC can be used for anything you want, from home improvements to debt consolidation, or even to fund your next investment property. It's a powerful financial tool that gives you increased flexibility in managing your finances. However, it's important to remember that your home is the collateral. If you fail to make your payments, you could risk losing your home. Remember, a HELOC gives you flexibility, but it's not a free pass to spend recklessly. You should always consider your financial situation and long-term goals before deciding if a HELOC is the right option for you. Like any financial tool, a HELOC, or home equity line of credit, has its pros and cons. Let's start with the advantages. One of the most appealing aspects of a HELOC is its lower interest rates. Compared to credit cards and personal loans, the interest rate on a HELOC is typically much lower because it's secured by your home. This can make it a smart choice for large expenses, such as home improvements or education costs. A HELOC also offers potential tax benefits. The interest you pay on a HELOC might be tax deductible if the funds are used to buy, build, or substantially improve the home that secures the loan. Of course, tax laws can be complex, so you'll want to consult with a tax advisor to understand how these potential benefits apply to your situation. Another plus is the flexibility. With a HELOC, you only borrow what you need when you need it, similar to a credit card. This flexibility can be particularly useful for ongoing expenses or projects where the total cost isn't known up front. But it's not all sunshine and rainbows. There are risks involved with a HELOC that need to be considered. The most significant risk is the potential loss of your home. If you're unable to make your payments, the lender could potentially foreclose on your home. It's vital to remember that with a HELOC, your home is collateral. Another risk is the variable interest rate. While the lower initial interest rate of a HELOC can be enticing, these rates are typically adjustable. This means they can increase over time, which can lead to higher monthly payments. Lastly, while the flexibility of a HELOC can be a pro, it can also be a con if it leads to overspending. Because you can access the funds easily, it might be tempting to borrow more than necessary, which can lead to increased debt. A HELOC can be a lifeline or a liability, depending on how you use it. So before diving in, weigh these pros and cons carefully, and consider how they align with your financial goals and risk tolerance. So you think a HELOC might be right for you? Here's what you need to qualify. A home equity line of credit, or HELOC, can be a great financial tool, but it's not handed out like candy at a parade. There are some qualifications that you need to meet. Let's break them down. First off, you need home equity. This is the difference between your home's current market value and the remaining balance on your mortgage. So, if you owe less on your home than it's worth, congratulations, you have home equity. Typically, lenders want you to have at least 20% equity in your home, but the more equity you have, the bigger the line of credit you could potentially qualify for. Next, we have your credit score. This little 3-digit number tells lenders how reliable you are when it comes to paying back debt. Many lenders look for a credit score of at least 620. But don't worry if your score is on the lower side. There are steps you can take to improve it, like paying your bills on time and keeping your credit card balances low. Now let's talk about your debt-to-income ratio. This is all your monthly debt payments divided by your gross monthly income. It gives lenders a snapshot of how much of your income is already spoken for by other debts. Most lenders prefer a debt-to-income ratio of 43% or less. Lastly, you need a stable income. Lenders want to see that you have a consistent income stream to pay back the HELOC. This could be from a regular job, self-employment, or even a pension. As long as it's steady and reliable, it counts. So there you have it. Home equity, a decent credit score, a manageable debt-to-income ratio, and stable income. These are the keys to qualifying for a home equity line of credit. Just remember, qualifying for a HELOC doesn't mean you have to use it. It's a tool, not a toy. We've covered a lot about home equity lines of credit today. From unraveling the concept of a home equity line of credit, or HELOC, to walking through its key features, we've journeyed through the pros and cons and even discussed how to qualify for one. If there's one thing to take away, it's that a HELOC can be an incredibly versatile financial tool, but like any tool, it's all about how you use it. With its revolving credit feature and potential tax benefits, it can provide significant flexibility. However, remember that it's not without its risks. As we've discussed, it's essential to use a HELOC responsibly, as your home is collateral. So, as we wrap up, keep in mind that understanding the ins and outs of a HELOC is just the first step. The real task lies in leveraging it wisely to meet your financial goals. Remember, your home is more than just a roof over your head. It's a powerful financial tool. Use it wisely.